Welcome back, my friends. Well, the title says it all. Intel executives and managers are taking pay cuts. This announcement comes just days after Intel's disastrous Q4 earnings report. The weak fourth quarter numbers that sent Intel shares plummeting. CEO Pat Gelsinger's base pay will be cut by 25%. And lesser cuts will come for executive team members. Even mid-level managers will take pay cuts. The consumer PC business has definitely hit a rough patch. Sales of high-end semiconductor chips have weakened. Demand is way down. 2022 has also basically been a bad year for chip companies. That is especially true of the companies that sell the most powerful chips. PC sales are the weakest that they have been in a few years now. And that has Wall Street analysts pretty unhappy. The pandemic fueled a boom in laptop sales to enable people to work from home. But, now, we are in the post-pandemic hangover. So what does this mean for PC companies? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Intel execs are getting a pay cut. Intel executives will take staggered base pay cuts. This comes just days after the chipmaker reported abysmal fourth quarter earnings. The company is also cutting benefits valued in the tens of millions for lower-level employees. The pay cuts will impact executives at all levels, starting with CEO Pat Gelsinger, and ranging down to mid-level managers. Gelsinger will have his base salary cut by 25%. That amounts to a cut of $312,000. But the vast majority of Gelsinger's compensation is from stock awards and options. Gelsinger's base pay was $1.25 million. According to his offer letter that amounted to just under 0.7% of his pay. Gelsinger made nearly $179 million in total compensation for 2021. That was his first year in the top job. Intel's share price has fallen over 50% since February 2021. That was Gelsinger's first month as CEO. The real costs may be felt among Intel's rank-and-file employees. Intel employees, like many Americans, rely on bonus payments and retirement matching programs. Intel will cut 401k matching in half from 5% to 2.5%. That will potentially saving Intel hundreds of millions of dollars. Intel spent $489 million in 2022 to match employee contributions to qualified retirement plans. Intel will also suspend merit raises and quarterly bonuses. Intel's pay cuts will also impact other leaders. Executive team members will take a 15% cut. Senior managers and mid-level managers will see pay cut by 10% and 5%, respectively. Lower-level employees would not be affected by pay cuts. As we continue to navigate macroeconomic headwinds and work to reduce costs across the company, Intel said. We've made several adjustments to our 2023 employee compensation and rewards programs, Intel continued. These changes are designed to impact our executive population more significantly and will help support the investments, the Intel statement said. These changes will accelerate our transformation and achieve our long-term strategy, the company said. Intel reported a net loss of $644 million for the fourth quarter of 2022. The company projected a weak 2023 outlook for Q1. That included a 40% year-over-year decline in sales in the March quarter. Intel rival AMD, on the other hand, beat on both the top and the bottom lines. But AMD guided down 10% for the upcoming quarter. Intel shares were down just a little following the announcement. These are tough times in the PC patch, and for semiconductor companies in general. Intel is planning layoffs. Word on the street is that the layoffs will likely number in the thousands, probably 20% of the workforce. The layoff is basically in response to declining demand for the Intel's consumer chips. The PC market is a downturn as the economy works through the post-pandemic hangover. The layoffs come even as Intel is ready to get billions in funding from the 2022 CHIPS Act. The CHIPS Act is a package of U.S. government spending designed to boost chip manufacturing in the United States. Intel's sales and marketing teams will be hit particularly hard by the layoffs. According to sources, headcount reductions will affect about 20% of Intel employees. Intel currently has 113,700 employees. The PC market is now struggling after basically 2 years on steroids driven by pandemic-fueled work-from-home demand. Global PC shipments 68 million units in Q3, which is 19.5% less than Q3 of 2021. That is the largest PC market decline since market tracking began in the mid-1990s. Intel discussed these difficulties in its Q2 earnings conference call in July. The company noted that its consumer semiconductor chip sales had declined by 25%. Overall company revenue declined by a whopping 22% year-over-year. Because of that, Intel actually lost $500 million. Intel reported a 109% reduction in profit in Q2 of 2022. That compares with the $5.1 billion it made in Q2 2021. During the Q2 earnings call, Intel CEO Pat Gelsinger basically telegraphed the layoffs. He noted that Intel would be lowering core expenses in calendar year 2022, and that the company would look to take additional actions in the second half of the year. Q3 shipments in the global PC market basically fell off a cliff at -15% year-over-year. New PC market information was recently reported by market research firm International Data Corporation, also known as IDC, in a published report. Total PC shipments for Q3 was 74.3 million units. That is 87.3 million units less than Q3 of 2021. And as we all know, inflation continues to rage in most of the world. Central banks are aggressively raising interest rates. Layoffs are sweeping the United States. So, consumers are pulling back on spending, especially discretionary spending. Demand for Chromebooks has plummeted and basically sapped any momentum the PC market had. The big players like Lenovo, HP, and Dell all saw double-digit decreases in Q3 shipments. Apple was the only bright spot with a 40% year-over-year increase from Q3 of last year. But that may have been a one-time event due to Apple trying to make up for pent-up shipments. Industry-wide, PC shipments were down 15% in Q3 versus a year earlier. Global shipments totaled 74.3 million in the quarter, according to the report. That is down from 87.3 million during the same period last year, the report continued. HP experienced a 28% decline in PC shipments. Dell PC shipments were down 21%. And Lenovo down 16%. Discretionary spending is weakening as economic conditions deteriorate. To some extent, demand may be awaiting powerful new chips. In the gaming segment, consumers are waiting for the new AMD Ryzen 7000 and the new Radeon graphics cards. Wall Street analysts will be sensitized to signs of weakness in PC shipments. Microsoft and Intel have their fortunes somewhat tied to PC sales. AMD reported Q3 revenue of $5.6 billion. Wall Street analysts were expecting $6.7 billion. Intel and Nvidia were basically singing from the same song sheet in their last couple of earnings calls. Although weakness in the PC patch hurts, it is not really as bad as it seems to be. Remember, all of this is in comparison to a work-from-home fueled sales boom. The gaming business remains an area of strength, up about 15% from last year. AMD and Nvidia are also living through the cryptocurrency mining hangover. Time was when crypto miners basically bought up every GPU they could get their hands on. AMD fourth quarter results will include shipments of the Ryzen 7000 CPU. The big chip makers, AMD, Intel and Nvidia, are hoping for a recovery in the chip market. 2022 has been painful for semiconductor chip companies. AMD, Nvidia, Intel has seen its market value melt from over $206 billion in January to $105 billion. That is a drop of almost half of the value of Intel shares. Micron Technology market capitalization sank $44 billion since the start of the year. That is a 43% decline. Qualcomm, for its part, has a market capitalization of $135.8 billion. And that is down more than $66 billion, or 33%, since the start of the year. And that affects microprocessor manufacturers like AMD and Intel. Presumably, PC manufacturers are encountering large inventories. AMD is also earning less money on its products as profits have been squeezed. Basically, this is due to prices competition in the face flagging demand for processor chips. And because AMD tried to liquidate its inventories in the graphics processor business. Semiconductor manufacturers are impacted in much the same way as the rest of the technology sector. Fears of recession are gripping consumers and businesses. So everyone is cutting back on spending. All of this comes as the United States teeters on the brink of recession. Inflation is raging. And the Federal Reserve is aggressively raising interest rates. The purpose of the aggressive interest rate hikes by the Federal Reserve is to quell inflation. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.